a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to take a look at a couple of brand new ETFs. Almost brand new, hot off the press. Our ETF Research Director, Nina Mishra, is going to tell us that. So, first of all, ETFs, they're hot.
They continue to be very popular with investors. Most investors now prefer these ultra-cheap ETFs compared to, actively managed, expensive funds. This year, 178 new ETFs have launched so far, taking the total number of products to 2,041 and assets under management to almost $3.3 trillion. And what we have seen is that these new ETFs are getting more niche. They focus on a very narrow corner of the market or a very specialized strategy. And the main reason is that easy ideas have already been taken. And it is very difficult for newcomers to compete with those ultra-cheap, ultra-popular, broader market or broader sector ETFs. So they are coming out with specialized and very interesting, investing strategies or corners of the market.
But you participated in a CNBC.com story not too long ago about ETF investing, and did I read it correctly that of all of the investment going on with ETFs, as popular as they are, most of the money is not coming into U.S.-based ETFs?
This year we have seen a lot of diversification in investors' portfolios because many investors are worried about, stretched valuations in the U.S. after more than 8 years of bull market. So a lot of investors are investing internationally too, in Europe, Asia, emerging markets. A lot of money went into bonds as well this year, surprisingly.
Yeah, that's an interesting tell kind of right there. All right, let's take a look at these. So you've got two that you're going to highlight. How new are they?
They just launched last week.
Oh, okay.
Very, very new, but I thought they were very interesting to discuss. So
the first one is the artificial intelligence-powered equity ETF?
Yes, so the ticker is AIEQ.
Okay.
It's the world's first artificial intelligence-powered ETF. It uses IBM's Watson supercomputer to analyze almost 6,000 US-listed equities. The Watson processes information, regulatory filings, news items, quarterly results, and social media posts on these companies. It processes almost 1 million of those filings and news items every day. And we know that data analysis has become very important in investing of late because the amount of information available has exploded, and so the need to analyze that data has also increased. And this, this ETF uses artificial intelligence to do the work of a big team of research analysts.
Sure.
It's not cheap because it is actively managed, so has an expense ratio of 75 basis points.
I would think it would have to be actively managed,
yes,
considering
exactly.
all of that data that it deals with.
What is analyzed by the machines, and then some human interference is required to arrive at investing decisions.
Yeah. All right, then the other one is the U.S. Tax Reform Fund. I got a question here. I'll let you talk about it first.
So the ticker is TAXR. This also launched last week, and it was a timely launch because we know the Senate passed the budget last week, which was an important step towards tax reform. And the Republican Party still hopes, many in the Republican Party hope that they will be able to pass tax reform by the end of the year, though it's going to be a long and difficult road, I think. And so this ETF holds companies, it identifies and holds companies which are likely to benefit from changes in the U.S. tax code. Now these companies that it identifies typically we have higher average market cap and higher average tax rate, but more attractive valuation than the Russell 2000 index. And most of these companies, they report a pre-tax income.
I see.
This is also actively managed. It has an expense ratio of 85 basis points.
Given the backdrop that we talked about here, what happens if tax reform, tax cut does not get passed this year? Does that put a fund like this in jeopardy?
It will, definitely. In fact, many economists and market experts say that because the stocks have gained so much in anticipation of tax reform. So if tax reform doesn't get done, we may see a sell-off in the broader market as well. And the companies which are seen as likely beneficiaries of the tax reform, they are also going to suffer.
Okay. Well, we'll have to wait and see on that one.
Yes, exactly.
In the meantime, do you own either of these two?
No, I don't.
All right. Check out more ETF information, commentary from Nina, and other ETF information in that section of Zacks.com's website. And all you need to do to get there is go to the homepage, use the Funds tab in the top toolbar. That'll cause another drop-down window to occur and give you another option to hit the ETF section of Zacks.com. With Nina, I'm Terry Ruffalo.